lesson, we're going to be learning about what is smart money and what exactly is SMC, right? So, what is smart money? What is SMC? So, SMC stands for Smart Money Concepts, and exactly what it is something really basic and easy to follow. If you don't know what it is, you'll know pretty much what the concepts of it are after this, right? Now, it's, again, like I say, it's very easy and basic to understand. Essentially, what you have is every movement inside of the market is an investment or a profit taking of some kind. And what we do with Smart Money Concepts is we look to reinvest when the big banks reinvest. So when you have an investment move, so let's just say an impulsive move like this, we'll go down to the charts and I'll show you some stuff on the charts after this. We have an impulsive move like this, which means somebody has invested money in this zone, right? When they have done that, it causes price to shift. When price shifts, it gets to a certain point and then they start to take profits, which causes normally a tumbling back down effect, right? Now, it's exactly the same with a downwards move, is they are either selling or getting rid of assets at a given point, which causes price to move down. Again, people start reaccumulating these orders, causing price to move back up. So then all we do is we look to reinvest at the point that they invested in the first place. So around the reinvestment point, right? And then 9 times out of 10, they will reinvest or they will liquidate. So price will come down or it will come essentially down or it will continue higher, right? So in this case, we have obviously, we have a buy move, which is shown here, and we have a sell move, which is shown here. So you can see what we're looking at in the sense of all it is a trending move. So we have an upwards move in the market, moves down, continues higher, comes down, moves higher. That's all we're looking at, right? Now, with smart money, when there's an investment, it's a big investment. So the people that invest, they don't invest to be wrong. Most of the time they are right. That's why they can invest such large sums of money, because they have very good investment skills and they move the markets with the size of the orders that they're placing. So essentially what you're going to see is you're going to see impulsive moves with retraces back to a given area, and then you're going to see impulsive moves again with retrace back to a given area. It doesn't matter what you're looking at, whether it's a upwards move or a downwards move. So now that is the basics of what it is that we do, which is find the investments, wait for the profit taking to happen, study the zone down here, and essentially wait for a reinvestment to occur. Now, how do you spot the reinvestments? It's all to do with breaks of structure and fractal price action. If you haven't watched the video on fractal price action, go and check that out. That's in the Telegram group, and we have one on our YouTube as well. And essentially, it's just based off of analyzing multiple time frames. So we're going to go down onto the charts now and have a look at a real life example. This isn't going to be the longest lesson, guys, but it will be a very useful lesson for anyone that doesn't understand what smart money concepts is. Now, we are going to look exactly here, right? Because it's a really good example. This is oil. Now, as you'll see, we have the impulsive move. Now, you can see how price is very slowly moving. It's like rippling. Then all of a sudden, it has a little blip, comes back down, and then it absolutely takes off in an impulsive manner up to the upside. So what we do as smart money traders is we're going to assess this movement, and we're going to look at this movement and we're going to say, right, where are the highlighted points? Where have people reinvested? Where have they got out? Where have they got in? So straight away, without even looking at this properly, I would say this is one investment point here. Why? Because you have huge imbalances leaving this zone, meaning that there's high volumes in this area. Exactly the same as down here. Where did the move start? It started from here, so that means that this exact area is going to have big volumes. And then we have one last zone, which is here. So these are our 3 zones to look at. Okay, so we're going to highlight these with essentially a little cube or rectangle tool, whatever you want to call it. We're just going to pull these out. All right. Now, these are also known as supply and demand zones, or whatever you know them as, POIs. They're all the same thing, as long as you understand what they mean. Now, again, what is going to happen at each of these points is if these are all made by the same investor, so this whole movement is made by the same investor, which I doubt it is because we're talking big moves in the oil market on the 4-hour time frame as well. So what happens is at each point is like powered by a given investor, right? So let's just say this is one investor, this is another one, and then you have the first investor down the bottom. So we've got 3 investors here, right? So when price starts coming back down and it hits this zone, this investor has a choice. They either reinvest, pushing price up, or they sell their positions, continuing price down in the manner it has already continued. Now, what you need to think about here is if we have multiple investors, they're all big players and they're all equally as powerful as each other. But if one is holding more chips than the other, one is holding more positions, they are always going to have the upper hand and they're always going to have the leverage on the other one, right? So what this investor at the top has to think about is, well, what are these guys doing? Are these guys holding their positions? Are they looking for price to come higher again? Are they reinvesting at the same point as me? Or are they going to continue to take their profits from the positions that are in profit down here? Because when you take profits from a position down here, it causes price to what? Come back to that position. Because you essentially are reimbursing the market, so the price of the market drops because there's more supply, but the demand is still equal. Now, when we essentially watch these zones, we're going to be looking for signs that big players are getting back in the game. So I'm going to get rid of these lines. We're just going to watch price fall down, right? So you can see here they're taking profits, huge amount of profits. Continue to go straight through. So that guy here was probably the first one to take profits. That's probably why it went straight through that zone, okay? So you can say that this guy here is out of the game. He's cleared his investments. He might have reinvested, sell positions here possibly. Again, with big investors, they normally just buy an asset. They don't normally sell it as much. Profit taking for them causes the sell moves, and they just wait for the sell move to get to the right price where they're interested in buying it again, and then that's where they buy it from. So again, we can now say, well, this investment point is completely broken through, and we can look for price to come lower, okay? Now, again, you can see it's playing around here because someone has invested here before. So you have other investors getting in, because you've got to remember there isn't just one big player, there's multiple. So they're all fighting each other essentially. So it's like a clash of titans really. You're going to have people trying to buy, people trying to sell, and as you can see, the sellers won. And when we have price coming down again lower, notice how it hits this zone, and this is where we're going to see these two essentially will probably become one because they're in a pretty similar region, so they have the same interests, okay? So because they have the same interests, they're probably going to do the same things. Doesn't mean they will, but chances are they probably will. So you can see price comes down, it taps in, liquidates the first level, which is fine. Sits in between now. So as you can see, this investment level was held. So the person that invested here might have invested here. This could be 2 investment points from the same person, right? And then essentially what they'd be doing is closing out these positions and saying, you know what, I prefer them here anyway, and then reinvesting them at the lowest point. Now when they reinvest, look how the market just immediately picks up in that direction because the volume's coming into it. It just can't, it has to be again taking some profits, because what you've got to remember, guys, is when they're putting in money, a lot of people are getting their money taken by these people. Again, when they take profits, a lot of people are trying to sell the market, so it means that they gather up money above their position. So when they get to here, people losing their money causes their profit to accelerate even quicker. So they're taking your money in turn, and then they're investing it into their own positions. So again, watch this level here. Remember, there's lots of stop losses in this area, so watch how quickly it clears through that. Bang, there you go. Straight away, one candle clears the whole zone. Again, it will be the same story here, and it will be the same story here. When we watch price come up, see how the way it wicks straight in, and then it heavily blasts through. A lot of the time, you'll get sort of a level where price will sit and it will consolidate below, gather in more stop losses, and then it will just punch through in one big go. Doesn't happen all the time, but you do see it. Now, again, here you go, look, selling away. So all the retail sellers are now rubbing their hands together saying, this is the place to sell from. And you'll see in a minute the way that, there you go, straight away, everyone was looking to sell, everyone got liquidated. So they might be going, right, well, we'll give it another go now. Again, pushes up higher. So now these people that were selling might become buyers. So it wouldn't surprise me if you see a drop. And there you go. See, now all the people that are buying become stopped out. So they become sellers again. And then the price does move down slightly, but in the end, it essentially liquidates the low. Will it liquidate this low? We'll see. Liquidates the low. And then I'm pretty sure it continues to the upside after it mitigates all of these low ends here. So there we go. So that is back to the original investment point, because the big guys have invested some money. They've taken it out. They've taken your stop losses all the way down till it gets to an investment point, and then they've reinvested. So exactly what I showed you up here is the same thing. They've made an investment, price is pushed. Made an investment, price is pushed. They then take profit slowly, hits the same level, and they reinvest their profits they've made. So it's essentially a money circulation. They don't ever stop. And now you're going to see the same thing over and over again here. So every time you see a push up, remember the theory of what I'm telling you and exactly what should happen, and you'll see exactly what happens. Right? So price comes down, they reinvest. When they reinvest, it causes a big boom in the market. Now again, they invest in multiple stages. Something as well, this is very much just a basic explanation as to what smart money concepts are. But what you need to realize is the volumes they're putting into the market are like in the millions. And I don't mean millions of pounds, I mean millions of lots. So they can't deploy them all at one point. So essentially you will see staggers in price, and you will see movements like this where profits drop down, but that's because they have to give room for other people to get in the market in the wrong direction so they can take those positions off of them. So again, we're going to keep playing this. Comes back down, so this is the investment. Price comes back down to the lowest point, normally underneath lows like this, because that's where people put their stop losses. Again, there we go, liquidates the low. And then they reinvest, pushing price back up. Now we can already see the way that price maps on this because I've highlighted the highs and the lows. But essentially I'm showing you the way price action moves and how they work inside the market. So now this is one thing, the way that we use smart money, and the way a lot of people do use smart money, but they sort of miss out a lot of the time, is you see how we have an investment which is successful, they then reinvest successfully. Again, an investment that was successful, they then reinvest successfully. An investment which was successful, they then reinvest, but not at the best price, which leaves a high level in this investment, meaning it gives us a POI. So we would be looking for a reaction when price gets back to there, whether it be a month, a year, a day, a week. Regardless, if price is going to continue in the upwards direction, reinvestments will occur at this level. And that's why we aim for inefficiencies inside the market. Efficiencies are when price moves up, comes back down to a level, they've reinvested successfully, they continue it, and what you'll see is as we get higher up the actual movement itself, the investments will get smaller. Why will the investments get smaller? Because they're looking to get rid of them at the highest point to sell them. Okay, so keep an eye on that. And you'll see here how we get another push up in a second. There we go, another push up, and then price comes back down. Pretty efficient reinvestment there because of the way price is being deployed. Again, starts to condense. The investments get smaller because they're changing their buy positions to sell positions, or they're clearing profits altogether, meaning the volumes are dropping. Price isn't going to be able to move as quickly as it did. Now we're going to look in here, right? And you're going to see right here, this is what we call a strong to weak hand conversion, or a weak to strong hand conversion, depending on what way you look at it. Now you can see here the way structural lows have been broken. This is our sign that they have dropped most of their investment, because if their investments were still in place, these levels would not be breached. We also call it a breaker structure. Now you can see here we start getting a huge sell-off, and as you can see from this point I'm starting to look for positions. Caught a lovely buy there up to the inefficiency. Again, price starts to sell. We'll keep moving this, and you can see how the selling moves don't move as efficiently as the buying moves. Why? Because they're taking profits. They don't need to come back to take more profits because they've got their profits. They need to come back to reinvest because they have left money on the table, essentially. Now, you'll see here how we do have retracements because it works both ways. Big investors like to buy in and they like to sell. It works both ways, okay? So you can see exactly the moves we're having now, and this is where we are presently at market. Now, I'm expecting for this pair, from a smart money concept, I'm expecting it to give some sort of push to the upside. Now, what you need to remember, guys, is a lot of people see this, and they start thinking that this means it's going to go like this for the rest of its life and continue up. Whereas that's not the case. So I have a zone here, which I'm interested in seeing price get to. So I'm thinking it's going to push up, come down to clear this imbalance on the lower side, which I just explained to you why we've looked at that. Obviously, there's a bit more to it than that, but that is the basic explanation. And from there, we expect price to continue investing higher because essentially the bigger investments are made on the lower half of this, meaning that all of the weight sits below this level. Now, they have two options, as always. They can either take the market higher, as I thought, or they can get rid of their investments and price will continue to drop. Now, what happens is unknown until we hit this zone. That's when we start looking at our fractal price actions and we start expecting price to give us another story. If we start seeing investments on the smaller time frames, we will look to get involved here to go with the big guys, right? So that is a basic explanation as to how smart money concepts work and exactly the theory behind what it is that we do. Now, if you have any questions regarding this, you can leave them in the Discord server or you can put them in the chat here at the trading floor. We also offer a full education in smart money concepts. So if you are looking to learn, then please do message us if you have any questions or feel free to check them out in our product section. Also, guys, if you didn't understand any of the other concepts in this, most of the time we do have videos to cover those concepts. So be sure to check those out. And we do take requests for lessons. So if you have requests, please pop them in one of the Discord servers. But until the next one, guys, I will catch you then. Peace.